Hi, everyone. Welcome back to the Market Chat. My name is richardlmoglen. Joining me today is one of my favorite follows on Twitter. We've got Scot. Scot is an individual investor, and today he's going to be talking about his methods. And Scot, thanks so much for being here. Welcome to the show.
Thank you. It's great to be here. I enjoy the show a lot, and I'm honored to sit in this chair.
Yeah, of course. Well, I always like to get started with a little bit about my guest background. So can you talk about your trading journey, how you got interested in stocks and trading in the first place, and kind of your evolution as a trader?
Sure, absolutely. I like to joke that we were kind of the original Robinhooders. So I went to college in late 90s, 2000, graduated in 01. But I was working as a coffee shop, and you go home after work and you're making minimum wage or thereabouts. And there was the ABC News, nightly news, and they were talking about the rise of the day traders, and they're interviewing these guys, and they're making, the numbers that they're throwing around was very impressive. And I'm like, I could toil all day, and then these guys are making that in 15 minutes, if thousands of dollars, and it was just crazy. So I started, getting interested in that. I started talking to some classmates when I went back to college in the fall, and I had some pretty smart classmates. One was in Qualcomm, big in that era, and he had ridden that up thing, several hundred points, and started learning about as much as I could, and it just really got it. I mean, it was the point where I'm skipping classes to trade. We had like the refresh button on Yahoo, like trying to get real time quotes, and then I remember when we first got streaming quotes, it was like the biggest deal. Right. Then you got real time, and that was the big deal back then, and. And I'm laughing when I watch these Senate hearings when they're talking about free trading and order flow, and I'm like, we're paying $25 a trade, right. And that was, we consider that cheap, and what that opened up was it opened up this new market, and all of a sudden it was obviously a very exciting time. We learned a lot. And then at some point I decided I wanted to get more involved in that, and I actually interviewed with a options market maker, and I wound up getting that job. And so I spent a year in Chicago learning how to trade options, or at least make markets in that. And I guess for better or worse, I bought the top of that market. That's when the market had crashed, and the floor kept getting smaller and smaller. People were getting fired, let go, every day. It was a very depressing period, for in 01, 02. But saw a lot of crazy stuff, and then I decided, maybe I want to get a real job for a bit, and did some other things, and then that they always say trading's kind of a jealous mistress, so it gets you back in there, and it's then I was trying to learn how to trade again, and I found out the markets, the structural markets had changed considerably. What worked in 99 and 98 did not work. You could literally buy any breakout, and it was going to be up 30% the next day. I didn't really have risk management control. I didn't know what I was looking for trying to get alpha, and you're reading everything you can, and there's a lot of misinformation, or people are saying you have to have the structural thing or paired trading, or you're not a real trader unless you're getting alpha. And so what are you shorting against, what are you long, and that kind of hedge model, and just kind of got messed up for a while, and eventually started putting one foot in front of the other, and kind of started figuring things out.
Makes sense. And tell me a little bit about how you made that evolution to profitability and consistency, because I see you also, you mentioned some books, you've got some behind you. So was that kind of part of it?
My favorite books that I've got, well, I actually don't have one of the ones, but learning to, it was Step Into My Trading Room was kind of the first book by Alex Elder. And that was really the first book that kind of opened up, and that's no slight on the other books, but what I liked about that book was that it specifically talked about kind of the risk management. You're taking 1% risk on a trade, or at most 2%. You only have 6% portfolio risk at a time. It talked about kind of the trend find in systems, and I think he probably overdid it. He's got a little indicators, and if you go to stockcharts.com, and I think they have his impulse system and stuff. But that at least it got kind of a start, kind of start thinking about the structural, I guess, output of the market. And I thought that was helpful. Then, of course, How to Make Money in Stocks by William O'Neill was big. The funny thing about that was when I was in college, I actually had one of the early editions.
Oh yeah.
And the problem with the early editions, they just show you the basis, so you're not really seeing what happens after that. And the new editions, that first 100 pages of the book are gold.
Right.
Like go bar by bar and go through those. But those certainly kind of got me on my way. Also, Stan Weinstein's book, and I kind of say that Stan Weinstein is probably the structure or the bones of any trading system, where you have the phase analysis. Stage one, where you're just kind of going sideways. Stage two is really where you want to be in that markup stage, where you're going rapidly, and then it kind of tops out stage three, and then you have the decline at stage four.
Right.
Then I think a lot of these books and systems work on top of each other. Certainly, I consider like O'Neill to be the muscle that I'd put on Weinstein, and then some other stuff that we could go through, and doing your own studies is just invaluable. And I've heard several of your guests talk about how that they've gone through and did a gap study or did something else, and just that process is just so important as in your development as a trader. The books, you can look at the setup and say that's great, but what did it do? Why is it on your watch list? How did you monitor it when you buy? I mean, obviously all the breakouts in the books work.
Right. Right.
You always have a cushion, to have the earnings, to be able to hold. And that's the kind of the thing when you're thinking in real time. Do I have enough cushion? Am I going to, can I hold this breakout
Right.
if it breaks out? So, it's kind of evolved, and I've tried to find out, my buy points and so forth off of that.
That's great. And I think it's always helpful for people to hear about the struggles as well of everybody starting out, because everybody sees the kind of end result on Twitter, the top traders in the U.S. Investing Championship. And you actually posted a really interesting tweet, I think a week or so ago. It was an old tweet of yours talking about, I feel like I'm really starting to figure it out. And then last year you had a very strong year. So talk about that kind of struggle and kind of what brought you from that point to where you are now.
Yeah, I mean, a few years. I mean, like you started, I was very sporadic. My stock selection was not good, and it's funny. I've listened to people on Twitter. I've talked with Tischendorf, for example, and he's like, your stock selection has gotten so much better. You had some good ideas and stuff, but then you just blow it with stupid stuff, and that's exactly what you're looking for, the quick money or whatever, and you jump into some of these sub-tier names, and I was doing a lot of that, and
Right.
The setup would work one time and you think you got it, and then they'd announce a secondary or some more dilution. So I'm like, I got to get away from these kind of junk stock names. So really just being more selective in your names that you're looking at has helped a lot on profitability. Finding which stocks are going to have like an institutional type bid. And you do that through volume analysis and so forth. But that was certainly that helped a lot. And then I guess that 2018 tweet or whatever it was, when I felt like I was a couple years away, it was like that was the year where it started to kind of click, and I started to see how much you could make when you just kind of cut out the crap.
Right.
And built it up, and then obviously that built into 2020, which was just an insane year. It blew out my wildest wildest dreams of what you thought was even possible.
Right.
And just the one trade after another, they're just working. They're going up more than you think they will. And I'm I guess if I've got things that I'm still working on, obviously, that I think we all are, the best traders are constantly learning from other traders, but also just being curious and kind of where you fall. I think having the discipline to weed out some of the junk stocks, sometimes that makes me not look at stocks I necessarily should have earlier. I was laughing. I was looking at my Silvergate or SI, chart, and I had a note on the chart. Oh, there's a great high tight flag. The stock's at like $13. I'm like, but the volume's not great. I'm like,
Right.
why was I looking at it? I wind up buying it in at 100 or at 95 rather, and adding into it. But it's just like you got to have some curiosity and being able to think a little bit beyond kind of the discipline, but still be disciplined that you're not just chasing everything that
Right.
it comes in. So you have to understand where it meets your kind of criteria.
Makes sense. And how do you kind of classify yourself as a trader from like the scale of day trader, which I know you're not, but all the way up to investor? Where do you kind of lie within that spectrum?
In between. I think of myself more of it like as an opportunist or kind of a speculator. I mean,
Right.
if you have an opportunity, and I'm not above taking that day trade. For example, I was up very, very early one night, morning, I guess, and Elon Musk tweets out, "Sandstorm is a masterpiece." He was talking about that song, and but the crowd goes out and they bid up like Sandstorm Gold. And
Right.
this is a multi-billion-dollar, it's a huge company. It's got tons of shares, and yet it's up 40%. Well, I shorted it, and then and I'm like, wait, this is too good to be true, and then I'm like, well, no, it's true. It's like short a little bit more. But by the morning I opened and I covered it on the open. But most of the time, like that's not my bread and butter trade. That was just an opportunity. I'd like to be. And I can talk a little bit about this when we go through kind of like IPOs and how I've studied them. But where IPOs or a new stock kind of has its first, we'll call it mature run. Those are the type of things like Pinterest or something that you can be in for months. And I want to catch as much of that move. Right. Kind of looking for base to base. I'm not at the point yet where I have the confidence to sit through a base. And be convinced it's going to come out in my favor the other side. So if I think it blows off into a base, I'm gonna I'll probably sell into that, which is what I did with Pinterest and at that point last year. But if a stock doesn't work, it's it's going to fail on me fast, and I'm out of it fast. So does that make me a day trader if I get stopped out in the same day?
No, that's fine. Cutting your losses, I'm sure, as you know, is super important. And that kind of brings me into my next question. What is kind of your average holding period for a winning stock, just ballpark numbers, and also losing stock, and also kind of your batting average, if you can give me an estimate on that, as well as average gain and average loss?
Sure. And I've kind of talked about, I've shared my kind of what we'll call a heat map that Interactive Brokers has on it, and the kind of the point I wanted to make with like kind of that heat map is my gains come in, it's a handful of stocks every year. It's that 5-6 names. Last year was obviously exceptional, but it's really like all your gains and everything else is kind of just it's there. It doesn't really matter. I mean, like I guess my winning percentage is probably in the 40s. I don't know. I've never really thought that. Once you realize that one Pinterest is going to take care of so many those just middle years or small losses, I like to think in getting my stop up to even or slightly break even as quick as possible. So I think of it as falling off a pitch. If it comes back down, I bang it out. I can try again, and it doesn't really cost me. It doesn't cost me any equity. It doesn't cost me any mental capital. Try it again. So I know I'm really kind of dancing around the question, but I don't really know what my average holding period is. Like it depends on kind of the class of stocks I'm trading. Last year I traded more mature stocks like Pinterest and some of the things as there was Zoom, DocuSign, CrowdStrike, as they were coming out in that run. This year I got off and I was trading more what I would call infant IPOs. Like these are the stocks that have just putting on their first dip, their first base, and I think trying to think of those more as swing trades. As they spike up, and you want to because they like it's gonna roll over. They're not at the point where they're going to mature. And you had it was like Kathy Donnelly, I think you interviewed, and I like her book a lot, the Lifecycle Trade. And she, and I I had done my own like IPO study where I went through like 6 years of basically every IPO that had gone through, went through the charts bar by bar, and I guess my conclusions were similar to theirs. Where most of the stocks are going to fall below their IPO price,
Right.
and I forgot what her statistic was, but it was like 80 or 90%.
Yeah.
But I found that most of the stocks, however, make a 30 to 50, 60, 70% run, from that first base. And that was something like I felt, I'm not trading Jim Rople type dollars where I've got a hedge fund that I need, that I'm going to get stuck in. As a retail trader, I felt it was worth trying to take advantage of and finding setups that are going to work for that infant run as well, because they can be, extremely powerful. Stocks. And if you think about it, it's an asymmetric risk because there are no natural sellers. They come out in the public, the insiders are locked up, and if it's got a story, if it's got anything, people are going to take a position and bid it up.
Right.
Then it reaches maturity, and then you could get lockup periods and kind of bases, and then the best of the breed will firm up again. And that's I kind of feel that it's like a different holding cycle. Or different period, and it's kind of a different trade.
Makes sense.
Your true market leaders are going to come in that second stage, but you can have some fantastic winners on the out of the gate.
Yeah, I completely agree. I mean, like last year we saw PLTR and Corsair. They made that first kind of IPO advanced phase, which I think is how they classify it. Yeah, I completely agree. And in both your screening and also your charting, what are kind of some tools and software that you use every single day?
Sure. I use I've got watch lists on first on the broker I use Interactive Brokers. It's got the watch list and everything, and I've got my watch list all separated. And so like during the day, it's probably good enough just to sort those by up down. But I use TC2000 pretty extensively. And I've got various I guess my true market leader list, and anything that comes on volume, and people will ask, well, how do you find a true market leader? It's not that hard. I mean, everybody on Twitter was trading the same stocks last year. I mean, I think how many people were in FSLY and Pinterest. Right. These were not secrets. I mean, you could literally pick that up by osmosis. I say that half jokingly, but they come on. They're in. It's they come in with volume. They come in with so noise. I mean, like a market winner, it doesn't catch anybody's surprise. It's just there, and it's then it's how well you manage that, and
right.
You be able to hold that and get that gain, or does the market take you out? Do other stocks take you out, or do you have too big of a position and or not big enough of a position? It's really kind of what I think we're all trying to do here. And
absolutely. Yeah, and could you go ahead and actually share your screen and open up TC2000?
Sure.
And since 2020 was such a extraordinary year, I always find it really interesting to ask people how they dealt with different periods. Obviously, we had that huge first initial sell-off, so I think why don't we start there, and you could talk through how you handled that.
All right, maybe start out. I'm going to go back to 2019 because that's kind of really how I came in with it. 2020. 2019 was a very kind of a choppy year. There was two. I mean, like this whole period with I'm going to look at DocuSign because this was like really the first stock. This is one I was holding into 2020. The market was this huge chop period. It was chopping here between August, September. It was at lows, and then all of a sudden DocuSign comes in with just huge volume. And I know I was buying, I think even maybe pre-market, but I'd taken this position, and it wasn't very explosive at that point, but it was just kind of dragging, holding up 21-day moving average, which is the turquoise line on my chart, and just kind of going up, and doing really well. So I was holding that stock. I was holding. I'm going to go back to a miss for myself here, but DocuSign and Tesla were really the only stocks that were that you wanted to trade back then. Let me see. I should probably go on a log here. Okay. Sorry. Towards the end of November, it has a big gap up. It came in, and then I actually had it like right here off this, this arrow. and it's my slingshot setup, which I can talk about in a bit. I didn't really trust the market back then. It was like so choppy. It was either that or DocuSign. So I was the idiot that sold when it, came in a new high. I figured, well, there's a lot of congestion here, and there it's going to go off. And I'm thinking to myself, I just made $15 and I missed the rest of this. So, yay for me. But the market was still roughly, kind of choppy going into the new year.
Right.
So a couple things were shaping up, and this was a pattern that I like. A lot of people think, they look for big volume and they just assume it's up. But one of the things that I like to look for is, particularly, what I noticed about Zoom last year was that, it showed power out of the gate. It showed there's a story here, something special. It came in and then it basically just held it where it IPO'd at once. And then it gaps down here on relatively big volume.
Mm-hmm.
And when it did push lower, I started buying it in, I guess, mid-December. Let's see where we get a date. Let me get my cursor here. So like, right in here, I've got the box here. And then it kind of came out and I'm holding it here. I think I sold some in the 80s on this big spike day, or maybe the day after it gapped up, and I re-put that on, and then it came out. What is the saying though, that when they raid the whorehouse, even the piano player gets taken in.
Right.
And I was in Zoom and DocuSign were really what I was holding at the beginning of the year, and we had a nice big run up here, and then it's coming back into 100. I'm like, is this something that'll just roll over like everything else? So I wound up selling it. I sold some of the 110s and out, and I really wasn't able to get back into Zoom.
Mm-hmm.
CrowdStrike was one I was a little bit more active in, but it had that same type of setup as we saw from Zoom.
Mm-hmm.
Although it was below its IPO price, it came in base and then it based on top of that. I think this might have been one of the first stocks that I was buying in January of 2020, and it started taking off, it started working, and then we've got our COVID issues here. I knew the stock was going to be a pretty big winner, because it actually, during like this huge mess, they had earnings, and it was so did DocuSign actually, and they had really favorable initial reactions, and then just the weight of the market pulled it down. Yeah, it came in, but so I was kind of trying to try some entries out here, and actually got it in the 30s. When it was like like we talked about relative strength, and it had gapped down like really bad, and the market was just going worse and worse, and it started going up. I'm like, well, this one's standing out. I'm going to put it on against yesterday's low, and that entry held, and I wish I would have held it all the way up, but I flipped out in the 50s, thinking, well, this market going to roll over again. I don't know. It traded again
in there. Do you mind if I ask you a question?
Sure.
Yeah. So a couple of these setups going into 2020, it seems like you're kind of I don't want to say bottom fishing, but you're looking for good low risk entries where very quickly if you're wrong. So can you talk about specifically Crowd and Zoom? It looks like you've got this blue line across the screen. Is that from the IPO low? Is that what that line is from?
Not in Crowd. I was kind of looking at where the volume was coming in at at these levels.
Right.
I had it traced it there. Let me see on Zoom, did the same thing. Zoom, I had it kind of at the IPO lows, and that's something that I want to track, is where's the IPO lows, and kind of where the high run is. So this is something I'd throw a line. I probably had a line and deleted it here, but I'd be looking at once it breaks this area, and this is what the lifecycle trade calls the turbulence zone.
Right.
So you put that on, and once it gets out of there, they tend to just rip, and this certainly was a turbulence zone in there. But I mean, we can look at Pinterest. I think it's about this. I've got my line there, of course, right?
Right.
So the highs, and then it comes in, and it same type of setup, but we have the big gap up right into that Turbulence zone. It wasn't giving anything back. But it was a, kind of my setup I was probably the most bullish about last year.
Right.
Just because it met my criteria from, when you have a big IPO, like, here's your first instance of big volume coming in,
Right.
Taking everyone by surprise, and, it's pushing a new high, and, it's just something I really wanted to work on. And
yeah.
And I think it took 3, 4, 5 type entries to get Pinterest to stick, but once it did, it was worth it.
Yeah, absolutely. And I guess that's kind of what I was asking about. When you're putting on a trade, maybe it's a little bit riskier. You're still in a correction phase. How do you decide how much of your initial position you'll buy, and how do you manage that risk to make sure that you can foul off a bunch of pitches and then finally when it pays off, it goes?
Yeah, absolutely. So, like, I don't really think of, percentage that I'm risking. I think of dollars. Like dollars, is the, if I've got let's say we're using $100,000 account. So 1% would be $1,000. So I'm like, okay, where's $1,000
Right.
here? Maybe I don't want it. Maybe I just want to, the market's a little bit shaky. Maybe we're only going to risk $500 and take a wider stop, smaller position. And, so, that's kind of how I'm viewing my risk when I'm putting on a trade. And that's actually the reason why I use arithmetic instead of log, because the percentages are less important to me than, the equity I'm risking on a particular trade. And I want to, it's not just like I'm going to risk $1,000 or whatever. And, I think the stop has to make sense. It has to be, am I, betting against a low moving average, or, at least there's got to be a risk point that I want to, calculate that against. So if it holds, if it takes off, the upside is just, it's big. And, I like buying kind of non-traditional entries, like you saw with Zoom, and because when those work, or, you're risking, a couple bucks on the downside to,
potentially make a lot more.
Yeah, no, and there's less drama, on these breakouts, they just get, let's talk about, let's say Shields, this one I know, it came up as a breakout yesterday, and if you could draw your line here, but I don't use fibs, so I don't know what this is.
They've got a lot of tools there, TC2000. I think you just have a right click and delete or something like that.
Yeah, probably. There we go.
There you go.
I wanted that one above it. Okay. So you're getting your breakout, and everyone's saying, well, this is starting to look good, and it runs up to 43, and then it just reverses.
Right.
But you're fighting everyone for the entrance, which means you're going to get slippage. You're fighting one for the exit. And I'm not quick on the draw as some of the people. I'm like, I kind of like to watch it mosey and try to grind up, and finally pick up pace, and you get an entry that's gonna work for you.
Absolutely. And I guess we should obviously talk about your two famous setups, the Fishhook and also the Slingshot, of course. So could you kind of talk through not just the setup, but also the kind of
I'll go through the kind of
psychology behind it. Yeah,
the thought process behind that. Okay, so the Fishhook was a setup it was really to address a problem that I was having, which is when a stock goes up, it gaps up. You can't just buy every gap up, because it's gonna fade on you. And how do you know which ones are going to work, which ones aren't? And it was interesting listening to some of your other guests that run there. Jim Ropel and George, is it Chuck? Who run money, and how they are buying, and what they were indicating is, they when a stock is great, you want to buy the close. So you want to, kind of where the institution is going to support the price. And as Jim Ropel was saying, like, he's buying the close. He's really paying attention to that volume level. George was saying he'd buy a little bit, and then, kind of the next day, and making sure that if it's tight and narrow. So you see a big gap up. We've had Twilio, for example, this week, right? Had the big gap up, and it gave it all back.
Right.
So like, I want to make sure that I'm not stuck in one of those situations that I'm, because quite frankly, I read an earnings report, and it shows great earnings, and it's gapping up. It looks good to me. And then I was getting my butt kicked. So I want to avoid that. So What I came up with is if kind of a setup definition that if a stock could have a big gap up and then kind of just be, tight or narrow, the next couple days, and then push through that first day close, which is where, the institutions are taking the positions, then there's something here. It's going to be supported. There's going to be something special. So the first one, I was going through a lot of charts to kind of work this out and figure out how it would work for me. And, kind of funny enough is like, I started this when I was still trading junk stocks and, kind of like, well, here's the stocks that they're up, and how do you know you're not going to get, crushed on this? And when they would push through, and one of my, I guess, trader mentors would say, oh, I've started using they have set up on earnings. It works great. I'm like, really? Okay. I think I can see where this is going. So one of those things, the first chart here is Facebook. And this is when Facebook launched. Facebook had been kind of a dud of an IPO. I think IPO at around 40, fell to around 18 or so. And then all of a sudden, big volume comes in. It steps up, gives nothing back, and then just through. And it just, kind of ran from there. So that'd be, the kind of a stereotypical, fish hook, where you did fish hooked on day 3. The second day was below the day close, and then, it pushed up, so you could be buying, as it retakes that closing level. And, it kind of looks like a fish hook if you were to draw it. It goes up, down, and pushes through. So that would be, kind of one that, I created. Let me see if I can make my screen a little bigger. Okay, the better. Okay, so AOI, this is the first one that I really, my first home run. And it's kind of same template as Facebook, same template as Pinterest, and same, as you have an IPO that really hasn't done that much. And all of a sudden it has the biggest volume ever. It holds the gap. The second day it went a little below, and then it popped above. So I bought a little bit, when you had, I think this was a red to green day. And, it kind of came along, and it just really took off. Eventually the stock would run up to 100. I can't say I got all that move, but I got enough to make me happy, and said, that there's something I want to do more with this particular setup. So let's go, Pinterest, right? That was the one last year. Kind of the same as AOI. And this is why I was so big on Pinterest last year, is it just kind of met that same template for me, where you had the gap up. Now, Pinterest was not as clean as a fish hook. Is like AOI, where it was, AOI was one under that second day. Pinterest actually ran above, and then it kind of pulled back, and eventually it kind of worked out. It took a little bit more time to go on to get through, and this entry didn't work as well. Right. And I tried it multiple times, which I'll get back to my second entry, which is the slingshot, but go through the fish hooks, because a lot of times fish hooks can turn into slingshots. I'll explain kind of what that is. Sonos, this would be another, decent one, where you had, the closed cuts under, and then it would break out here. Probably would have stopped you out, but it obviously has been a double basically from this point. And FSLY. I think this is same type of template. The first IPO big volume move, and this was the one in end of May, and we were talking about kind of like the series of stocks that came out. So stocks were coming in, and eventually it was like the leaders were Zoom, DocuSign, CrowdStrike to some extent, and those kind of they never got it. They just kind of ground higher. Then in like May, we have like some explosive stocks coming out. It was FSLY, it was Datadog, and it was Chegg. Like basically, I think all in a week with each other. Right. So those are the stocks that got me the most excited about the market. So FSLY was it had a fish hook. It goes below, and then trades up, and it was kind of off the races for that one. Right. Chegg to some extent as well. That for the first day close, it came up. It obviously retested again, but then that was off to the races as well.
Scott, can I ask you this? On the fish hook, where are you putting your stop loss, if any?
Yeah, I'm definitely having a stop loss. It depends on the stock, and kind of you're looking at the range. I will zoom into like an hourly chart. I'll zoom in, kind of seeing where the volume is coming in. If there's a clear volume level you can play off, particularly if you're buying on like the day two, I want to see where did the volume come in on day one that
Right.
where I'm gonna cut it off. If it's not right, like I don't want it to go, like, for example, if I was buying it here, there's no way that's getting to the gap.
Right.
That'd be too much risk. But it kind of makes sense as far as what kind of position size you want to put on, or if you can get a lead or not.
For sure.
But if you get a little bit of a lead and you're up, then you get your stop to even, and I like to do that pretty quickly. So the slingshot problem that I was trying to address is, what does a pullback setup look? Are you just going to buy into a hole and then it's going to just keep going lower and lower and lower? So when I was testing out different setups, that I wanted a stock that had power, first off, that showed that there was something special to it, and then that it was capable of showing that it was going to resume the move again. In other words, the pullback was over. So what a lot of times that you'll look at is a stock that is capable, that starts off with the fishhook or the big earnings gap, and then its first pullback, and then when it crosses the slingshot by definition is just the crossover the 4 EM of the highs. And for whatever reason that works really well in tracks, a lot of stocks, as far as giving you that secondary entry. You can test it in, like, Facebook would have done it in the 1, 2, 3, 4, basically 2 weeks after that first move, it had its first pullback. And I remember that, like, and people were like, "Oh, it's going to roll over Facebook's junk," and then all of a sudden, that this was a low risk entry, because you put your stop typically low of the day, and you're just not you're not risking that much. Let me see. So I use that very extensively. And so I've got TC 2000 coded right now. So these white dashes are when you have that 4 EM of the crossover there, or your slingshot. And so at that point I'm looking for entries. And one of the nice things about TC 2000s is you can scan the whole market just for that setup.
Right.
So I'll run that scan with IPOs, and I keep my IPOs by year. So I want to tend to move together. Same stock, same era. They're same kind of process of where they're at. Let me show, so one of the other setups that for example, I will use other slingshots. So we had applied materials, we had showed some power. You got your slingshots at 60, and you could have rolled it all the way up to 90, without much drama. And that's really what it's trying to do, is get the pullback with a tight entry or tight stop. And at the moment that momentum changes. Now that there's a lot of times, like if you stock like Best Buy, it has a big pop up. Your first slingshot on there is it's a little early.
Right.
It's just going to cross over. I mean, sometimes they work, but more often than not, you want to kind of when they settle down a bit. So like one of the things I've been working on is looking at kind of an average, true range, and when that comes down, it tend to work better when the range is contracted. People have gotten bored out of the stock before they come out, but you kind of get the idea. It's essentially just like a kind of a wedge or a falling a bull flag,
right.
But it lets me objectively define it, and if you can objectively define it, then you can scan for it.
Right. So just to summarize, your fishhook is coming through the close of that huge volume up day, and then your slingshot is as it crosses through the 4 EMA of the highs. Is that right?
Correct.
Right.
Yeah.
Very cool. And I'm sure we'll look at some charts later and talk about entries intraday, but I think that's a great place to start. And I don't know if you mentioned it, I think I asked you a little bit, but could you talk about your screening process? And you say now you're focusing more on higher quality names. So
Sure.
What is that process like, and how do you find stocks, and what do you deem basically high quality, true market leader potential stocks?
Sure. I consider myself probably mostly technical.
Right.
I feel like the fundamental, and that's not to say I ignore fundamentals, but I feel like the fundamentals are reflected in stock, and the people that can move a stock and show that there's big volume in the stock understand the fundamentals. They understand a metric that I don't know what moves the stock. There might be certain metrics in certain industries are more relevant. Same store sales if you're in retail. There might be what is it, MAUs for like some of the social media stocks that institutions are far more keyed into than just reading the balance sheet.
Right.
So what to find those type of stocks, you're looking for just massive volume. So anytime that you see biggest weekly volume, or biggest daily volume, or even biggest monthly volume, ever, you want to take note of that. You want to see what is that? Does it come out, particularly if it comes out when there's earnings and you see the biggest volume ever? I don't need to look at what the earnings are. I know they're good.
Mm-hmm.
It's not Aunt Sally that's buying it. I don't know what Pinterest's numbers were at all, but I know that it's a big enough stock and they could run it up, and they held
Right.
it.
Right.
So I guess that's kind of how when I'm looking at stock. So I'll do the volume scans, and then once a stock is kind of on my true market leader list, watch list, I'll kind of watch them, and once they're there until they totally crap out, I'm going to stalk them and watch them and see how they continue to set up.
Makes sense. And in terms of overall portfolio, how many stocks are you usually in at any given time? And do you use margin? And if so, how do you decide when to go on margin or when to get off it?
Sure. Is stocks, well, first off, it kind of depends on different times of year. So if you're coming out of like a correction,
right,
I'm going to start taking, I'm going to take a lot of stocks. I want to say, because I don't know what's going to be the winners, and some are going to work, some are not. And I'll start paring down, if some, it looks okay, or, I just don't love it, or I don't like the action. So I'll start cutting that down. And, I'm looking to hold maybe, 4, 5, 6, stocks that I think are core. Maybe I think one is special, and that's going to be the, a bigger position. But if I have, a bigger position, then I'm just going to cut down on extra stocks. And, one of the things that, I used to think that I was, being more diverse if you have 10% positions instead of, 100% positions in other names, right? But if you're trading all growth stocks, look what happened this morning.
they all
It didn't matter. There was no diversity, or there's they all acted as the same. And if you need to get out of the stocks, it's easier to get out of 2 stocks than 12.
Right.
Stuff's going on. So I kind of worked on trying to find just the ones that I think are behaving the best until they're not behaving the best. I do use margin. I'll come in as setups are working, and pair off as stock gets stops. I got off margin earlier this week when stocks were stopping out and they're not working as well. So then they can figure out, here's the 1 or 2 stocks I want to be able to try to hold, and if it happens, so it'll be it. Otherwise, they'll ramp up again when it resets.
Makes sense. So from what you just said, it seems like you're pretty concentrated. Are you only in like 5 stocks, 4 stocks? What's kind of a sense for that?
Yeah, I mean, like in a good period, I'd like to hold 4 or 5 stocks.
Mm-hmm.
To be around. I mean, and if I kind of view it as there'll be times where if I think the market is just is crap, I'll get the cash and view it as like there's a train coming through. You don't know if it's going to hit or not. There's no reason to wait it. Just step aside, and if a train passes or if it's on a different track, then you can get back in. And a lot of times I'll view that the re-entering that stock is a kind of a continuation of my original position.
Right.
And that kind of mental shift has changed it. So I'm thinking, I didn't really just buy DDD. Like DDD is one that I traded a lot this year. I bought that at 28, not 38, because I stepped aside and, and just kind of having that extra, thought process and kind of as it pushes ahead, that makes it easier to hold stocks, and certainly buy them higher, because one of the first obstacles that, I think a lot of traders have is they're afraid to buy a stock higher than they sold it.
Right.
It's kind of this mental, like, well, why would I buy it back? I had it at $50. Why am I buying 55? if you kind of view it as a continuation, so what, miss a point if it's going to 100, it doesn't really matter.
Yeah, absolutely. And you mentioned there that the market conditions play into how many stocks you have, and also how much capital you're allocating. So can you talk about how you determine the market conditions and when you're going to be stepping on the gas versus, hey, I might go completely in cash, the market's not right?
Sure. I'm looking at my true market leader watch list, the ones that.
Can you bring it up, Ashley?
Yeah, let's do that. Let's look at this. Let's see. I've got my leader scanner here. That would be interesting. So you always want to have your FANG names, because so much of the money is moved, and big institutions move those stocks. Tesla, even if it wasn't performing well or whatever, that is such, like, all the speculative money is going into Tesla, or it tells you so much. I mean, you're really, with those 5-6 stocks, you can tell so much. Like, they scared the crap out of everyone with Tesla, and then they bid it all the way back up.
Right.
It tells you there's an underlying bid there. We'll see what they rolls over tomorrow, but at least it was a good sign. Seeing with the most speculative big name institutional stock was getting a bid, but and you can see that, that happened almost every stock that we'll see.
Right. So basically, to get a feel for the market, you're looking at this list of major growth stocks, and just basically watching their price action. Are they setting up? Are they rolling over? Is that kind of how you do it?
Yeah, exactly. I mean, and if they're selling off, is volume coming into it?
Right.
And that might have been one of the mistakes I made in January, at the end of January. Was they looked like they were going to get, like, where's Tesla? It looked like it was going to break down here, but there really wasn't any volume into it. So I kind of preemptively scared myself out of some positions, but I bought them back and have had a great February. So I guess all's well that ends well. But yeah, I mean, it's just like, if you start seeing big stocks take volume and get hit, and certainly I think that over the next couple of days is going to be so interesting. Obviously we had big gap downs, we had volume come in on the sell side, but then we had a bigger volume come back on the buy side to bid them back up. And really, I think the market is kind of in a crossroads place right now, and I'm not really sure that I want to be in the midst of the battle with a lot of exposure until we know kind of, are we going higher, we're going to base, or are they going to hit us with another wave of selling like they did last March?
Right.
So that's kind of where I'm seeing the market right now. But I'll go through all the leaders, and this is something you want to do daily, and it's typically about 100 names on my list that I'm really these are stocks that have taken big volume, or they've gone up and there was something interesting about it. For example, one that just came on really was HubSpot. Again, we had the big gap up the volume, and it's holding pretty well for a stock like that, but we'll see. Got picked up.
Absolutely. So from what you just said, it seems like the indexes are really just not a part of your equation.
No, not really. No, because there's stocks that the stocks that drive the index. And some today it was like I was really focusing on what is Tesla doing. I'm not. I know intent to buy Tesla, but I knew if they gapped it down, when it get down to about 619 or so, today. That stock was going to drive the market today. And you don't really need to watch anything else to know how the index did. And probably, if you were to put them up on the same screen, you probably see a pretty heavy correlation. Right. But every day there's some story like that. But I want to see how my stocks or the growth stocks are doing more than I mean, my stocks were down quite a bit yesterday, and the Dow was up. So it's certainly not something that's gonna I'm gonna key into.
Absolutely. And could you bring up a recent Fishhook that you've bought, or if you want to explain how you would potentially buy HubSpot if the market was right and everything was going well? Because I think it'd be interesting to see both the daily setup that you're looking for, but also intraday on a, I don't know what minute chart or hourly, and talk about how you would buy it.
Sure. So one of the things that was it's interesting about sharing your setups on Twitter is that people use them and then they'll text you and they'll Twitter it, or they'll DM and sometimes they have given you some great advice.
Right.
So one of somebody mentioned that they use this of a slingshot, the 4-hour EMA crossover in a fishhook type stock. And I'm like, well, that's really interesting. So what I'd be looking at a HubSpot, is, you have the crossover right here. You can just buy it on the hourly chart. And so that's something I did not try this one. I really didn't want to buy breakouts this past
Right.
week, but
Right.
that's something that I'd be looking at. To 3D systems. This is one I know I traded. Again, we had. I think this was like within 2 days. This was the biggest quarterly volume that the stock has ever had, which is just insane. And this was kind of a sloppy fishhook in the sense that the second day it really spiked, and then third day it came in. I waited a little bit on this one and kind of waited until it really the hourly range and just really slowed down. And I was in other names, otherwise I might have tried it earlier. But this is one that's so you've got your fishhook stock or type stock, and then when it you get the 4-hour EMA crossover, there was my buy point.
And you can see the ATR coming in right there too on the hourly chart.
Yeah, you get the ATR, and I'm still playing around what ATR I'm going to use right now. I've kind of like what a 3 ATR is showing me, but that's subject to change. Just kind of just a visual to see how it you can visually see the compression. But and and I think a lot of people have talked about this, but the markets go from periods of contraction to expansion. So you find you really want to be getting interested in a stock when you have that contraction period, and it doesn't matter what time frame you're trading on. Like if you find this on an hourly or a daily or even a weekly, then you trade it accordingly. But this happens on every single time frame there is. But yeah.
No, it makes sense. And do you only usually, is an hourly chart as close in as you'll go, or will you also go to a 15 and 5? I see you've got up there on the screen.
Yeah, no, I've got all the settings that it came with, but I will occasionally, particularly like if I see volume coming into a stock, I like looking at the 5-minute chart just to see. I'm not really making trading decisions on it, but I want to see how fast the volume is coming in, and I think you can kind of get a sense for how aggressively they want to bid on it on the 5-minute chart. I'm not saying make the trading decisions on that, but certainly you see the volume spikes, like and if you get a huge spike, if sometimes you'll see just something totally abnormal for it, somebody really wants to get into that stock. So yeah, that's how I use the kind of shorter time frames, but hours smoother. I don't know. Daily, I'm not waiting until that final candle prints before I'm taking the position. So, it's kind of, so the other thing I have on my charts is the volume levels or price by volume. So I'm really interested in where the volume comes in a stock. And, a lot of times zooming in to an hourly chart or, even, some of the other time frames can show you, where they buy in and how are they buying it at that level. So that's, kind of something that I'm paying attention to, particularly if I'm buying a pullback. I want to see, that there's consolidation there, at least time consolidation, or it's sitting there that it was getting bid at that level, and that's not always apparent from a daily chart. It can be in the bottom third of the candle for on some, but and that's not going to just reflect it if it doesn't close there. But if you zoom in, you can see getting hits. Like we can see, just for example here, it's bidding up here, and you're getting kind of a consolidation area right here. So if we're looking to buy it, I'd be like, okay, well it's testing this area. What is it going to do? I should go next candle, see what happens. I guess it would have worked. What do you know?
Yep.
So that's kind of the areas where I'm looking, kind of where it comes into it at prior volume levels.
Makes sense. And could you go back to the point where you actually bought DDD? Because I want to talk about your initial stop loss and
Sure.
how you're making sure that if it turns against you, you're keeping that loss very small, and then it might set up again and you try one more time. So where do you put that first stop? And as it works for you, when are you moving it to break even? And then as it continues to work towards the upside, when do you move it up even further?
So yeah, obviously, I bought it at I don't know 24 and change or whatever, 24, maybe 25. But I was playing it against this blue line right here. That was my stop. I don't really remember how quickly I moved the stop up. I could see just from the size of the candle, prints 26, and so I was probably moving it by the time it got up, high 25s. My stop was probably even. I know that I had added onto the stock as well, and I think I kind of in here on the gap up here. Again, we have that real consolidation here, and I was adding. My stop is still even on the position, if not in the break in the money or in the money. I know I traded DDD one other time. It was like it was right here. I think maybe I bought it like pre-market, and I was like, I got really lucky. No, I got the end right here. So yeah, about right here. And I just kind of felt like you were getting the bids up, and it was like one of those days where it was going, and I got a really good price pre-market, and it just kind of just went off from there.
Could you talk to me about buying pre-market and post-market? Do you do that often? And
no, I don't do it. I don't mind selling. Sometimes pre-market or post-market. You get total FOMO bids and asks, and sometimes you can get crazy exits. But I actually have a sign on my monitor, no pre, no post, but I sometimes don't listen to myself. But I generally don't. I don't like buying, pre-market unless you feel like you're really getting like a misbid or something. There's occasionally that you'll see that if you can get an exit. But this was one that it was really close to the open. So if I'm 20 minutes before the open, that's a different consideration than the night before. So that's kind of where I would land that. Although I have been known to violate that on some of these GameStop or whatever, but I had a interesting little trade on that.
Yeah, do you want to bring that up and talk about what you did?
Sure. Okay.
Because this is not a Can Slim quality name, of course.
No, it's not a Can Slim, and this is one of the things that maybe as Can Slim traders we need to challenge ourselves to say, like we all miss this stock.
Find your inner Robin Hood trader,
Yeah. So it would have been a great, setup, but I had a little scalp on it when it broke through 100, and that's just a Jesse Livermore thing, that Livermore ghost level, right? When stocks go through 100, they really rip. So I took about 12 points off of that, which was and then you see it up to 250 to 300 the next day. I'm like, damn it. But it was just really just kind of that opportunity. Like, there's no way this doesn't get bid right through 100. And once it does, it's going to, I get a little pop. But the trade that was more interesting was, I got to put on the daily here. So it came down to the 50-day moving average. And we had really pulled down, it was this day. And it had really pulled out like, what was the high 480? I'm not even going to say post down, but what was it down?
90%.
80, it was down 90%. And we're at the 50-day moving average. And so what I kind of said is I'm going to buy it towards the close of after hours. I didn't really want that exposure, so I bought it roughly $50. And I'm going to sell it before, it gapped up like $5, and then quickly it was up $10, sold off half, got stopped even, and then sold out the remainder at 75. I think it wound up going to 92, but it was just kind of like this, this 50-day bounce where you know that there's going to be some type of bounce. It's down 90%. It's the prior volume level. Either two things are going to happen. It's going to stop, or I did not have a big position of this, so it's I'm not going all in or anything like this. I think it was maybe less than a 5% position, maybe, so it wasn't like made it rain or anything, but it was just kind of a opportunity.
Yeah, it makes sense. And I guess that was my next question. How are you managing risk in something like this that could gap up or just gap down below your stop?
Size. Yeah. I figured that the chances are realistically, I don't know that it had gapped down once, and all these. They were up. So I felt like the gap down risk at the 50-day moving average was probably not that high. But still, I was going to give it not a ton of size. So it worked.
Right. Could you actually bring up Pinterest? Because we've talked a little bit about your entry setups and doing that initial stop loss, but I also want to hear about your position management and what makes you sell a stock, whether in pieces or all at once.
Sure. So in Pinterest, I had tried it. I tried it here. I think it's working, and I think this is probably a break-even stop. I'd get my stop up. It was working. I think I tried it here, and then I got stopped out, and then when I get another slingshot, right? That the white dash. So I bought it there. I figured I was going to play it against the low. It's starting to, I think it's going to work. I don't know. This is the best set. Every time it bounced back up, so it tells you that there was something there, but the market was still a little bit choppy there. But I actually had a pretty big position of Pinterest on because I was really risking against the dollar.
Mm-hmm.
My stop was probably I no more than $1.50 at that point. So it wasn't it wasn't like I'm going to break out where there's just natural compression. I felt like the stock price had compressed enough, and then so I was taking it through. Then just kind of it started working. Then we get this little bit of gap up, and we're right here, and so you're right here is you're really, this is your decision point, because you're up 40-50%, and you've got earnings. And so your question is, the question, how do you know whether to take it through earnings or not, right? And this is something that, I've been burned both ways. I'm sure we all have. Anybody's taken through earnings, his experience, the fun of an earnings report going against them, or you sell it before earnings and it takes off in launches. So, anyways, I felt like I was gonna take this one through earnings. I had the gains on the year. I was up over roughly about 150. And the gains in the stock, and I don't know that if either of those things, if I was only up 10% on the year, I'm not taking this trade. I'm cashing out. But I figure I can use some of the, kind of profits I had built up to take that risk. Then I guess, this is such a huge earnings gap, and I wound up selling a little bit out at 60, level or so. And actually I talked with another trader that night. He's like, you're nuts for that position size, and get a pair down. I'm like, yeah, you're right. And I'm going to reward myself for taking that. And, because I'm obviously, well, what is this whole thing going to roll over and fade? So I taken a little off, I think I wound up cutting it all off here, and then it bounced and I put some back on, and then I kind of got bored with the stock here. It just kind of went sideways as the market was going up. I remember this was like the first stock I put on beginning of January, and it crushed me. It was going up. It looks like we had a really big breakout. Where was it? Right here. Yeah. And then, but then it rolled off, and then we got a shakeout off of the what moving average is that?
Yeah.
It's the 50-day moving average. So we got the shakeout. So I want to put it back on with not as much size. And the last I traded it, was here. I saw we had reversals everywhere. So I wound up cutting that when it wasn't able to make any more progress. So I've been out of it since, which is too bad. It looks good. It had a really nice day today after getting shaken everybody out.
Yeah. What do you think about today in general? Because we saw this happen with Snapchat. We saw Pinterest, Twitter. What's kind of your overall thoughts on the action that we're seeing today?
Yeah, there's definitely some underlying bids, and there's definitely some bargain, shopping. This is how do you argue with Snapchat? This looks very shakeout, to me. When you have a shakeout like that, you'd expect the next couple of days to accelerate to the upside. If people are wrong, they will, they have to buy it back. I think Snap is obviously going to be a market leader, and that's certainly a name that I've traded. Twitter again, that's another one that just really launched. It retested, actually. If we're talking Fishhooks, this is one I had marked, but I did not personally take it. Mm-hmm. But it tested your Fishhook buy point, and then it bounced up. That's what we're looking at here is where it had found price consolidation or congestion at the former all-time high.
Right. Could you bring up SI, because I want to talk through this trade with you and see your thoughts, because you made an interesting sell in pre-market one of the days, but also you there's been some huge reversals. So can you talk about your initial buys and how you manage this?
Sure. I mean, this is a stock I really, really like. It's a the banking industry, and it's a stock that I've been following. So actually, like I mentioned, I think like low volume but nice flag. Wouldn't have been nice to buy at
right.
$23, right? But it had that kind of nice action. But I did not actually traded until then right here. But see, before you make a trade decision, you want to see look left on the chart and see what has happened. So we had another kind of a little base. You had a secondary. It gets immediately bought up, and then it gets triggered. So here's actually where I took my first buy. It breaks out, and then it retests that breakout point, and then it hammers off of it. And so that's what I liked about it is it's testing the breakout, showing that it's valid, that there's price support at that level. So that's where I took that. I guess my position. I rolled that up to let's see. Once I got a pre-market sell at like 164. It sold off a quarter. Either this day or this day. And then what it was interesting is we had a big gap in the chart. And when you kind of see gaps in the chart, it's you want to mark them and kind of see how the price behaves. Once I bought it tested it and bounced. I bought more at that level, quite a bit because I had the basis from the low 90s to do it, and then we had to get all tested today, which was fun, but it actually closed pretty well. Just a bit below the 21-day moving average. I don't know. It was not a fun day with the volatility. I flipped out a little bit from 107 to I think I sold that at 120, but we'll just kind of try to build up more of a cushion to hold. I think if this is a true market leader, this is a stock that it's only got a market cap of 3 billion, which is pretty low. Certainly can go a lot higher if we're comparing to even like these other what I'd call junkier Bitcoin plays like RIOT. Which is the better company, RIOT? It has no earnings and or SI, which interesting. I was looking at funding Bitcoin account or cryptocurrency accounts, and they'd all go through SI. So it kind of has reminiscences of one of my early trades in the they're 98, 99, which was one of the online market makers.
Right.
That was all electronic, and that's kind of a picks and shovel play on the whole crypto thing, which I think is cool.
Yeah, definitely. And how are you managing your stop loss? Because today it was a 30% intraday drop. So are you waiting until the end of the day to make the decision? And how do you handle that volatility? Kind of psychologically.
The cycle. I've gone through a lot of charts, just historic charts, and you're going to have those volatility days. But I was going to manage it off the end of day and kind of see how it closed. I figured, at a stock that this is a smaller stock, it can get whipped around. It's like, I really don't. If you get a stop loss, let's say there's probably people that had their stops at 115, they got filled at 102. It was just that wild, on the open. I kind of wanted to see where it was going to get in. And had built up enough cushions that I wasn't taking more risk than I would have, I guess, allowed myself to take. Per rules, and that not taking the deep red position. And this is a very heavy profitable position, or at least it was until it's less profitable of a position. But yeah, how do you manage that? You have fewer other positions. You don't, you're not going to load the boat on everything else. So. We'll see. The mental aspect is, is something that you always work through, and you got to think about, not looking at the profit and loss on a daily basis, and did it behave okay or didn't it? I feel like this one, it did. It closed all right, but it certainly was a bumpy ride. But maybe I'll change my tune tomorrow.
Yeah, we'll see. And could you give another example of potentially a recent trade and talk through why you sold it? Because I want to know a little bit more about your selling process and your methodology there.
Sure. I've got a lot of recent sells because
The market, yeah, been
Yeah,
shaky.
yeah. I mean, like, so I was looking at VOXX. This was kind of stock, it meets that kind of that template. Um, when it was gonna he was gonna gap, and I've had my stop right here. I willingly sold that one right on the open. I didn't want to. I wanted to reduce exposure because anything that if you can find a bid that hasn't been hit yet, and there's at least one stock you want to see what's going to do. This wasn't my A-list name, so
Right.
that one I sold this one at pre-market because I could see stuff was going unfavorable. I got actually a decent exit. I spared myself this. But what I was thinking with this trade is I've got the gap fill. I'm going to see if it's going to bounce off of that, and it gapped the other way. So just get out of it. But I mean, these are kind of atypical sells. Typically I'm just going to hold my stop and let it stop out.
How do you move that stop up if you've got a decent gain, 40-50%? Where are you keeping that stop, and is it kind of a more mental, like you said with SI, you're waiting until the end of day to see how it acted?
It's going to depend on the stock, honestly. It's with DDD, I was definitely having hard stops on that, and like I actually I did all right. Managing this one, I sold some into spikes on DDD, and then my stop, I moved it up to, like, for example, when I got up to about 50, 56 or whatever, I sold some, I believe, around 53, and then I had my stop at just south of 50. I figured if it can't hold 50, then we'll go to cash, or at least we'll get rid of that stock. But I just kind of trailed it all the way up. So that's one of the things that I'm trying to learn from some of the past mistakes. Where you find a good trade and it gets up a lot, and then you don't make anything
Round
from
trip
it.
Right.
I round trip Fastly twice last year, so I can want to avoid that.
I feel you on that. And speaking of that, how often do you do kind of post analysis, look back on your past trades, and what are a couple things that you're working on right now to improve upon?
One of the things I do is I'll put the notes on my trades. So as I'm looking through my trades, I can see kind of what I was buying, what are my thoughts,
right?
So I can look back at that. Then I'll take a look at kind of where my gains are coming from, and once you realize that your gains are coming from just a handful of stocks, it makes it much easier to get detached from the stocks that you were up 10% and you stop out, or take a break even or a small loss if you're up, a bit. It just wasn't its time to make the big move. So I look at those. I look at where the gains are coming from, how the moves have developed, and then also we'll go through kind of. It's probably more important than going through your own trades is look through the past winners last year and say, well, if I apply my rules, how would have I traded this one? I think that's just a great exercise to get a little bit better at. As far as things that I'm working on, I guess I'm working at being a little bit more open-minded to different types of stocks. I mean, I did not trade. CELH as well. It's like, oh, that's coming from these really low dollar amounts. That's kind of a no for me. And then I'm like, well, I wish I would have thought otherwise, right?
Right.
So that's certainly one thing. And then just kind of becoming less emotional on the ups and downs. That's a process. You gotta just detach yourself from the daily profit and loss and try not to look at it.
Makes sense. And I meant to ask this earlier, but what do you kind of do to de-stress and kind of forget the market for a little bit? I mean, you're famous for your cocktails, so talk a little bit about your pastimes and
cocktails, right?
Yeah.
No, I mean, I used to, exercise quite a bit, and we've got the rowing machine that the people on Twitter were kind enough to give me recommendations. So, that's something, going for walks, I think is great. Tried the meditation thing a little bit, but, I with Headspace, but I think really what helps more is just walking the dog and just kind of just getting lost in your thoughts in the morning and being able to separate yourself from the market a little bit. I think that helps. And then the cocktail thing was fun. It was like a quarantine hobby, and then I started posting those and got great feedback, and then people would reach out and give recipes, and it was a great way actually to build up some relationships, and you get trading introductions, and it's been really cool. But yeah, I'm always fan. I think it's cool to learn new things, and contrary to maybe what the appearance I give, I'm not drinking them every night.
Very cool, very cool. And let me make sure, Scott, that I've answered, that I've asked all the questions I want to. And is there anything else you wanted to cover that we haven't already?
Yeah, let's do that. So one of the things that I do with IPOs is I lump them by year. I can so I go by 2019 and 21. Look through the IPOs, and like I said, you can scan them if you have a criteria. So one of the ones that I traded, and let's look at like DoorDash, for example. This one is you could really see was setting up, and then you've got your 4 AM or 4 EMA crossover, your Slingshot. Just absolutely launched. Unfortunately, I did not take it at this point. I did get this one, and then I sold it into that 210 level. So it was about a $15-16 move, which was a decent little trade. I mean, but I'm thinking of those as kind of swing trades. But certainly those are something that I can scan for, and I will look at and trade. Lemonade was what am I looking at?
And how do you decide to sell into strength when it's on the way up too?
Partly is that kind of what type of stock you're trading. Like a Lemonade it doesn't have the maturity that Pinterest did last year. I mean, it only came IPO last July. We still had kind of like what a turbulence zone. And I traded it pretty heavy in this area into my year very nicely. But as I was looking at kind of Lemonade is getting started getting tight again, and then it just ran, which was nice. I think you start seeing everything stop and gap up, and so one of the things that I'll sell is if other stocks of that vintage are not acting well. For example, I was in A, B, and B. I think I'm like, I had taken it from here out of this little Slingshot, and then it had gone up, really, really, really strong. And then it started to falter a little bit. And I'm watching DoorDash, and DoorDash gets up to 250, and it's the reverse. I'm like, holy crap, this is red. It's going to be they're going to come for everything. So I sold a lot that day. And it was kind of a warning flag, and so that's one of the reasons that you'll sell it just if you see other stocks that are kind of in that era that are getting hit.
No, makes sense. And
but it's I'm not setting price target. I generally not setting profit targets or anything. It's just kind of like, well, how is it coming? How's the volume coming in? Is it normal or abnormal? And this is abnormal if the stock goes from 200 to 50 and then reverses the entirety.
Right. And could you talk about maybe your biggest winner and biggest loser? You mentioned FSLY earlier, so your biggest winner and biggest loser of 2020. I think that'd be very interesting to hear you talk through those trades.
Yeah, my biggest winner was Pinterest. We already talked about that one. I think Unity was probably up there as one of my second biggest winners, or certainly tough. CrowdStrike was up there. DocuSign was up there, but we saw some of those. This one is kind of the traditional IPO pullback slingshot model, and and we got a Fishhook thrown in for good measure. It actually had earnings on this day, and then it had crossed it in. But I had taken this one. This one was a very frustrating stock. I got shaken out a number of times on it. But when you saw the volume come in, and on the earnings reaction was very positive. Up to 215 off the 21-day moving average, and it was always getting picked up at the 21-day moving average, which tells you there's an underlying bid there. Right. It was strength. So I started buying it kind of on that day, and just really just held it all the way up to the year, and I hit enough size that it turned out to be a pretty good trade. Right. Worst trades of the year. I don't know. Worst trades are. I'd fast like so many times. Yeah,
Right. Same.
I had actually done all right on it in that first earnings gap, but I sold it out, and yeah, I missed this. I bought it okay again. But found support off of that 65-day moving average, and starts coming in. I've got a big trade coming on. This is a high tide flag. It's going to look like one of the ones in the book, right? And it had really had launched. Let's get the move. So it had launched all the way up to 134, and earnings coming. But I'm like, well, I've got the 40% cushion, or whatever. I'm fine. Nope.
Yeah.
So I want to sell it the same day. I totally round tripped it. I don't know if I was a little up or a little down on that trade, but it was rough. It wasn't a big loss either way. But it took me a couple times to get the entry right there. And then I'm like, I should have totally been forewarned off that stock, right? But I did it again. I had an entry just perfect. I was in it around 90 or so, and it again goes up to 135, and then they pre-announced, and it was brutal. I think I sold on the open. I probably should have just banged it out pre-market. Right. But yeah, it was not fun. I did not get hit on this one. I learned my lesson.
Right. All right, Scott, thanks so much for sharing your methods and process. And I always end it with this question: what is kind of some advice for anybody new starting out with this, new traders who want to speed up their learning curves?
Sure. I think the first thing is you have to take ownership. You have to take ownership of your trading results. It's not, if your stock goes against you, it's not the analysts, it's not the market makers. Just be responsible. For own your result. I think that helps a lot. And then view it as view the long game. Don't try to view it as, I'm going to get rich on this one trade and I'm just going to have it. I think I've certainly made that mistake before. But yeah, just focus on the process as opposed to just the end results. If your process is getting better, your end results will start improving as well.
I think that's great advice, and we appreciate you coming on here and sharing your setups and everything. Make sure you guys go ahead and follow Scott on Twitter. I'll have his link down in the description. Scott, thanks again. And for everybody watching, I appreciate you tuning in. Leave a like down below on the video if you did enjoy, and subscribe if you are new. And we'll see you guys in future videos.
All right. Thanks.